Alrighty, what's going on? What's going on? Let's see here really quick. Making sure I have everything pulled up really quick. So today's for the recap of 4/25/2023. And today was pretty good day from what we were wanting to see when it comes to dollar index and it comes to Euro USD, and then obviously our indices. So we'll start with dollar and euro. And let's see here. Let me get the right screen up here really quick. Okay, cool. So just had to make sure I had the right screen up really fast. But um, first off, everything that we look happens on the dollar index, right? If the dollar's going up, XXX USD pairs are going to do one thing, and if the dollar is going down, they're going to do the opposite, right? So if you look here on the far left, what I have is the US dollar for the daily, right? So each one of these bars represents a day of price. And so I'm actually going to go up to one higher, which is the weekly. And you can see how last week and for actually the last five, almost 6 weeks, we had bearish weeks, 1, 2, 3, 4, 5. And the market was really just relentless from 105 all the way down to where we're pretty much at and where we were at yesterday, 101.50. All right, so now when you look at this from a monthly perspective, because we're coming to the end of April, right? We're looking still more bearish, right? So unless we come back above that monthly open, which would be 102.50, so you can kind of see what it looks like on the 4 hour, 102.50. So inside the last up candle, the fast push. So I'm just gonna highlight this area. So this is a candle that obviously, would have taken out traders because it was just so violent to the upside, right? But as you can see, it's all part of the bigger picture, right? So let's go ahead and mark that monthly open. So that's the monthly open right there. So that's the start of April right there, right? The first day that we traded in April. So let me mark this really quick. All right. So as you guys can see, in the middle here, right? Price had started off April, pushed up, and then came down and made a lower low, right? And then price retraced, right? Mitigating above the monthly open, right? The monthly opening price. And then look how beautifully, this came in here on the higher time frames into the last up candle and hit the open of that candle and then fell from that point. Right. So pretty much if you look at it from that perspective, the only thing you're looking at on the US dollar, if it's going to continue higher, where my eyes are set are these equal highs here. Right. These ones here. And then there's another set right here. All right. So let me see here. What? I was like, yo. They're messing up a video, But okay, so like I was saying, let's go back to here. So the liquidity spots, right? When I first started trading with Jordan Morgan and those guys, all we used to mark up all the time were double tops and double bottoms, right? That's where the liquidity sits. Now, from this previous swing high to the swing low of this market, that's what you're going to be able to identify this 4 hour range, right? So when you're looking at this low to here, you can see that price could manipulate a lot of people, based off of news or whatever it could be, and run up into those areas. Let me move them out of the way. All right, I just wanted you guys to see how they align though, right, with those areas. Right, so they could manipulate into this last up candle, and then they could again fail, and as you guys can see, hit these monthly equal lows. So let me move this out of the way. All right. So these monthly equal lows, you guys can see those right there, right? And then that would be filling the monthly imbalance at 101 whole level, which, is very possible, right? Because we're, starting to break below this little order block candle to go down a little bit lower, I feel like into possibly 98, right? Unless now we go back into, diving down into the daily. And as you guys can see, when we look from a higher time frame perspective, when we look for buy mitigation, right, this is a beautiful daily buy mitigation, right? The price is making lower lows, lower highs, lower low, and then price shot up like crazy, came back right into the area. Now, it didn't break the structure of the monthly open, right? But it was the way it was setting up here on the 4 hour. Right. So I actually had made a video the other day where I was saying, when you're measuring off our entry strategy, when you're looking for the open of the candle, the 50% of the candle, when you're looking from time frame down, so like from left to right, the open of this candle and the 50%, well, what is it? What do those areas look like? Well, what's the candle that takes out traders, right? Where's the open of that candle? And so when you look at that, you can see it's actually this candle that starts that, run to take out these lows. All right, so that actually happens to look on the daily, right? You can see that's like around the daily open, that down candle before the push higher. And then 50% of that area where price exploded was where I was saying to focus on this huge imbalance, right? And then this candle here where it started, right? So right around that 101.40, 101.20 area, we were looking to look for a strike. Now it's going to be very difficult. You guys can see here on the right. If you're just going to, I don't play the Asian session. I only play the New York. So like price started running off at midnight and then into London open, making higher highs and higher lows and then just exploding here on the 1 hour and taking that 1 hour structure high, right? So, and the previous day, right? So, and that's where we're at now currently. So, to see price potentially grow up to 102.20, 102.40s and 50s, and back to that monthly open, you guys can kind of see what I'm saying now, right? And so to go bullish, if we were to extend from here, what I'm looking at is to take out like all this trend line liquidity right here, like 1, 2, 3, 4, and I'm targeting 103 and 103.50 imbalance for right now, right? And maybe 104 eventually, but right now the positions I'm taking, like that's the type of areas I'm looking for to hit for dollar. Okay. So now on the other side of this is the Euro USD. So the only things I really personally trade anymore, I've traded like everything at one point, but what I really trade now is dollar and euro, and I like to trade the indices. So at the same time today, that on the 4 hour, that the dollar, right, was making that run higher to take that 4 hour last up candle right here. At the same time, Euro USD, right, had sold off today, but it was a beautiful area where it sold off and where I had dropped the mitigation Monday, area because I was saying, hey, we accumulated really nice inside this candle, right? And then we decided it kind of went sideways. The price was wicking into this area. Then price extended, made that higher high, and then price started mitigating. And like I said, I don't trade this anymore because of the timing that this happens. Like this stuff sometimes will happen at London and Asia, and sometimes will happen at New York. And and usually the biggest moves happen still in New York. But I just the moves that I'm looking for, something like a breakout and comes back into the area. That's what I'm looking for. So you've seen price basically push up into the 110, 102s, 110, 104. And then right in here, this is where I was saying on that video that if dollar was to fail, right, going lower, right, and starting to find some buyers in this area, the 101.25 quarter levels, then you're gonna see euro flip at this area here, at this last sub candle. And so today, as you guys can see here, price was already making lower lows at 2 a.m. So London session. Price made filled an imbalance of a 15-minute here and then made more lower lows and lower highs. And then coming into, my plan this morning for New York, price was already making lower lows and lower highs, and going to attack, down inside, oops, down inside this last 4 hour down candles open, right? Which that's where you have the imbalance. So for me, that's also, this is all building into, why I wanted to take shorts on indices today, right? So yeah, seeing this already shorting off, was understanding we were going to have more strength in dollar on, the daily and possibly this week, depending on what fundamentals come out, could fill this imbalance here on dollar. Maybe not this week, but over, a period of time, maybe we get up into these areas and take out these wicks. So now when you go to, the higher time frame, Nas 100, we'll go straight into this. The weekly, we hit this last up candle. Let's see here. So on the weekly, we hit this last up candle really nice, right? And then rejected that area. On the daily, we had made that lower low, lower high, and then made another lower low. And then price kind of showed like as it was going to continue this trend, and then did exactly what we expected it to do, which was to mitigate out of those positions. So to look at that on a like a 4 hour, you can see this simultaneously goes over when I go over the daily, which is April 18th right here. You can see what it looks like here, right? And so some of this stuff here uh, that I can show you guys on the 4 hour, where we were paying attention to the price in this candle here, and then price shot up, which was April the 18th right here, and then price rejected that candle, and since then has just died off in the 4 hour. So today, when you look at price, because this is, like I said, the higher time frame of it all, we were looking for, let's see, what we were looking for on the higher time frames was obviously more downside price, but now I can kind of show you that intraday price so you can see where we caught the entry and why we play the times we do. So looking at all three, I just use the overall market as confluence. Um, use the overall market as confluence, right? So you can see the beautiful mitigations. So something that I do personally is I play the 15-5 in 1 minute. So every day I highlight the same candles in those times in those areas, and it helps out a lot. So one thing you can see on Dow if you're looking for shorts, right? I'm gonna pull this up over here really quick. Let me see where it's at. That's not what I'm trying to do. Give me 1 second. No, I'm not trying to do that. Oh, it's like, all right, so I'm gonna pull this up really quick and make sure it shows up. Okay, so so how to look for sales, right? So if you can look at Dow, right, all these 7 steps are the steps that are very simple but easiest to focus on to be able to hit these trades and get TPs, right? So let me see if I can annotate. Oh, cool, I can. Okay, cool. So one thing I can show you guys about this diagram when you're looking at this area and matching this picture up is number one is they get people to go sideways, the people who play at the wrong times. So if you're not playing the first 15 minutes or the last 15 minutes and those 5 minute closes on indices, a lot of times you're going to get hit, out of the trades. One thing you can notice about this is when you're looking at this, you're already asking yourself is what is this, right? So if you're looking for a sell, you're looking for distribution. right? So you identify distribution by price going up, making higher highs, right? And then going there and making lower lows and breaking the structure and just going lower, right? So that's what you're looking for in distribution is lower lows and lower highs. So one thing you can notice is price is making higher highs here, higher lows, higher highs. And I'm looking at candle closures, right? Higher low, higher high, right? Also, on this one, it actually broke and went above the Asian session high at that time and filled the imbalance. But what's really important is how this actually broke down going into New York, right? So price actually broke down, as you guys can see here. And this is what I wait for, is this FOMO, right? Price actually went and closed higher, or excuse me, closed lower, lower low here, and people started, having that fear of missing out. Then price runs back up. Sorry, this annotation is terrible, but runs back up into where? Points of interest, right? And then the right timing. All right, so I'm just showing you guys like one thing about these trades that I would say that if they're going to work a high probability is, let's say you took a sell in that London open area. Well, your stop loss should go no higher than this high here, and your TP1 should be a 1 to 3 by from that mitigation entry, right? So I'm going to show an example with Dow Jones, and I'm going to show an example with the trade that I personally took, which was Nas. Okay, and so I was kind of showing you guys. Just how that mitigation played out perfectly, and then how you want to come in here and get really familiar with identifying fast push candles, right? Because then if you look at the line graph, you can really see how this made that lower low, push back above market open, above London, above New York, and then price was, as soon as this 10-15 candle closed, or excuse me, opened, then after that, it was just a downfall to London lows, right? And so a lot of the times I'm targeting Asian liquidity or London liquidity, right? So if I have a short, I'm looking to get to at least London liquidity for a 1 to 5, right? So just to kind of map out this move, just to show you guys an example, right? 10-15, your stop. We like to do no more than 30 points. So this would have been to around somewhere in here, let's just say 30 points. Now, remember, like I said on that example, when you're looking for shorts, you want your first TP1, so that first structural low after you take the trade, to be relatively a 1 to 3, right? Because then you can actually follow that rule of anytime your trade goes 1 to 2 in your favor with indices in an intraday trade with targets, then you can cap that trade off, right? And that's one of the things I've been looking at my trade logs and looking at just the ups and the downs of everything. And it's like the faster that you can and I said the word faster, but it's like skillfully faster. But the faster you can get in and out and not make more decisions, you're going to have a higher success rate. So, like I said, that first structural low, when we look at this, right here, would have been here, right? So looking at that, that's about a 1 to 2.5, right? So at about 2.5. So to get to the London lows, I want that to be between 3% return or a 5% return. Right, so that gets you to about close to like 4, right? Before price ever made that, when it made that low and then bounced a little bit. So right there, you can manage a position, fairly well on that trade, right? You can, and then your next trade, not next trade, but the same trade, but managing this trade, how it would look is you would target based off percentages that London open, right? Because now you're targeting London open and then also previous day low, right? It's for a 1 to 6. So you can always cap a position like this off by cutting 1 to 3, if that makes sense, right? So you're looking at a 1 to 6, but when price starts to pull back or do anything crazy, you could cut that position in half. Run with your 3% for the day, and then just come back to your computer around this time and just really evaluate because there's no movement for a full hour, right? So that was a good Dow setup. But the one I personally took, I'm gonna go to really quick on Nas. And from the hour and the 15 perspective, it actually looked pretty good. I would say you guys can really see it right here when I pull over this other window here in a second. Pull over on the 5 and the 1 minute. because that picture really shows up. Everything that we do is fractal, right? So to understand where we were trying to go here was really more on the 4 hour. And I was trying to get to the 4 hour lows, right? So which would have been pretty much right here was, the 12,820s. Um, and then, obviously going into lower price, attacking this last down candle here, 12,700. So, I mean, as you can see now, when I bring this over here, this is what I've seen for New York. All right. So when you actually go back and you see this picture again, right, it really makes sense. Like it really makes sense, right? Because think about it. Everything that I was looking for happened in this picture. New York Open was right here. This is the 1 minute. Price shot up, right? Price came back down. Price shot back up, came back down one more time around 37. I actually took an entry in this area, price like when it was below New York Open and was attacking where? That first structural high. But let's kind of recap on this, right? So I'm going to show you from the buy perspective because I was going to buy to sell, but I thought on the 5 minute, right? This is what I was kind of looking at, just kind of give you guys an idea. I thought if we were to buy up at New York Open right here, let's kind of run this back like this. Right. I was thinking, okay, cool. We've got that higher high, break of structure close, playing back down into this candle. We could get up to the London Open. We could sweep this high. We could possibly get up into that daily open. And then we could eventually, run one of my favorite liquidity spots, which is the Asian liquidity. So that's what I wanted to see. Right. And then I was like, oh, okay, maybe it'll even pop back up in the market open where we have a lot of liquidity here, right above Asian liquidity. So it was all setting up for, that to go play its role. But then as you can see, you want to really focus on the first 15 minutes after the open, what happens. And also we had fundamental news that came out at 9. So that was also a bigger picture. And then if you look at this from a perspective of just a 1 hour, we were sitting with equal lows, right? We had lows here, so people that bought this market here, their stop losses were tight. People who bought here in London, stop losses tight. So now you have a higher chance, a higher probability with a bullish dollar, right? Because remember, we have a bullish dollar. You have a higher probability for this to actually go lower, and so that's what we've seen today, right at the open. And I'm gonna go back in here on the 5 minute. And so I'll kind of go through this really quick. Bam, right? So price came down, I believe, right into this area that we were looking for, which was this down candle inside this imbalance. And we were looking for price to actually continue, like I said, a little bit higher. Let me go back to this 1 minute so we can see both. So this is what I want to show you guys right here. A lot of people, right? Because the New York Open had already happened, right? So we're looking at price on the 1 minute right here, right? Boom, price goes lower. But what do most people do? They freak out, right? They freak out and they start shorting the market right here, here, and here, right? But they don't have the same mindset that we do because we short above, opening price and bullet and bearish conditions, right? So this is what's happening to the masses right here. So that 5 minute, they're freaking out, right? Like, oh my God, I missed the move. Price is already below the New York Open. It's probably going to continue lower. Like I said, they start selling here around 846. Now, remember, like I said, you have to remember we had fundamental news that came out at 9. So those individuals that sold here, what do you think happened when, they could, this is what price would have looked like. Go back here. you know, when price was like in these areas, right? They're like, oh, okay, cool, lower low, lower high, respected the New York Open is going to go lower, right? Well, they forget about the news, right? News is the excuse to push price in areas that's going to hurt traders. So kind of take you guys with the time here. The time right here was 8:55, right? So like I said, you're looking for things that happen at 5 minute closes. So this next 5 minute close, what did price do? Exactly. Right. So in a 5 minute, you guys are seeing like how this is working out. 9 a.m. when you're looking for things are fractal, right? So when you're looking for a 5 minute play, like I'm looking for price to shoot back above the New York Open and be able to get the best risk reward on this trade. Well, look at this, guys. Look at this on the 1 minute, right? That's beautiful, right? It goes through all the steps. If you're looking for shorts, right? Price is above the open, price is at the perfect time, right? Price has the break of structure, which is here. So let me tell you guys a secret. Trades most of the time work out if you let the psychology play out, right? They run the price up, lower low, right? So it makes a lower low. Like I used to identify my trades like this all the time when I first started trading. And sometimes you have to go back to the things you started doing. Lower low, right? And then what did you get here, right? Price came up and made a lower high, but you're not anticipating a lower high until you're playing by the rules that we play by, right? So that 5 minute, when you get that push up, now what's our entry strategy say on a 5 minute? We play the open or the 50% of a fast push up candle, right? So there's the open, right? You guys see how simultaneously it's on the right side on that 1 minute. And then there's the 50%, right? Like right in this area, right where the candle hit. Now, when you're looking for the to hit this 50% of this candle in this 5 minute, you're most likely looking at a 1 minute imbalance fill, right? So if you look at this, I was actually identifying this area here as imbalance, right? And I was looking for that area to play based off my strategy when it comes to fibs, right? From swing low to swing high, I like to take 71% entries at the right time. Right. So it's all aligning. And then does it make sense if I take this trade at this time with my stop loss at this wick high, 15 points or 20? Yes. And I ended up doing a 12 point risk just to get to this low is at 3%. It's 2.8, right? So, a little bit more. Let's push this one forward just to see. So in those next, 5 minutes, 10 minutes, you're for sure at a 1 to 3 risk reward, right? And so that was how basically it played out. And sometimes, like I said, guys, what you're looking for is that manipulation. So to kind of go through what happened to those individuals that shorted in the wrong area is they started shorting as price was going down and they started just saying, okay, I'm going to do a 20-point risk. Or I'm going to do a risk at the highs, right? Or I'm going to do a risk at this candle here because it goes back up there, whatever, right? They come up with anything, right? And then price starts going down and they start tightening that stop. They start tightening and start lowering the risk, right? And then especially as price starts pushing against them, what do people do, right? They're lowering the risk, they're cutting their profits, whatever they're doing, right? But as soon as it comes all the way back up and knocks them out, what do you think they do, right? They try to sell again because they try to buy it again, excuse me, because they're thinking, oh, okay, well, now price is going up. I just lost on the short, but they didn't realize they just played into the fear of missing out. Does that make sense? So they shorted. They're like, damn, why didn't price continue to go lower? I would know I was in the right area. Then what to do? It runs back up to take them right back to zero, right? And then what do they do? And at that point, they usually buy that position that comes back below that New York Open. They'll buy that position, and then it doesn't go in their favor and just goes down. Right. So then it's like, well, damn, I lost the sell and I lost the buy. And then they're like, well, damn, I should have just held the first position. I've done this so many times. I promise. So go back on the recording and just kind of see what I'm saying again, right? And the thought process of what time people were doing these things, right? They're selling. They get a chance. They're like, oh wow, right here, price starts selling off. They're like, oh wow, this is gonna be a good trade. Price shoots up on them very fast for the news. They start, basically taking profit or, like I said, cutting their move, or some of them have moved their risk too tight, whatever it could be. And that's exactly the idea you're looking for, right? And I've tricked myself out of this move so many times, it's crazy. But just wanted to show you guys this breakdown here and how price just, obviously from there, what I started doing and, that could have helped me a little bit more, maybe make a little bit more profit today was as soon as this 5 minute last up candle was created here. So this one here, this is now your new 5 minute structural structure that you're looking for from here to this low. And you can see right around, I believe it was 9:45, around that area, price kind of trend shifted and wanted to, it seemed like it wanted to buy back up. And it looked really nice here on the 5 minute. So you guys can kind of see. So it had all these, lower low, lower highs, and all of a sudden that down candle was set. And you could see how price actually played right here in this area, right? So this candle right here, this was here, and that's the same area you're looking at right there, right? On the 1 minute. Then you had a higher low and another push higher high, which is that huge burst, right? So at this point, I was kind of thinking that maybe they're going to come back up to New York Open, so I just capped off my position. When and had already, was like, well, it'll either hit the TP or, I'll be back tomorrow. And so after taking this entry here, this is what I wanted to show too. It's just like if you take an entry here with your stop at these highs here, right? Let's just say 15 points. And then you had to this low, like I said, you want this to at least be a 1 to 3. So that was the main thing for me. And like I said, it was about a 1 to 2.8. But looking at this, if price never goes above or even above this area, essentially, then you would want to see price just continue lower. And so that's essentially what happened today. And I'm glad I capped my position off and was able to just kind of just let it do its thing. And this is kind of like the result of that, right? So price came down. So it made the low, it made a new high, it made a higher low. And so like I was like, okay, wow, they're gonna mitigate here at 10 a.m. to go back up into New York Open, London Open, take this liquidity here that we were initially looking at, right? And as you guys can see here on the 5 minute, price failed, right? Price failed right here on the 1 minute. You guys can see it here, 10:20. And then from that point, price pretty much dies off, until the end of the day, making a new lower low. And from that, 12.9 position, this is already at 12.837. So price was already almost at 100 points. And, right there, boom, that's 100 points. You look at a higher time frame, 1 hour here. And we had already hit our target of the previous daily low. So yeah, it's part of it, man. It's just once you see it though, we're gonna keep going over it like this. It'll come to you. But it takes time for me as well. I mean, just just doing this video for myself, even going back over and just watching, um, and looking for these things over and over is very helpful. So let me see what this is. So just kind of show you guys price the rest of the day. And usually into power hours. So for me, it's the 1500 hour. Really on the 5 minute, all you were getting were lower lows and lower highs, lower low, lower high. You see what I mean? So price was just continuing lower and lower. And so like pay yourself zones were like the previous daily low, right? So like when I showed the 1 hour, like when you took a trade in here, you could have maybe paid yourself at this low. As well as looking at the 4 hour, right? So for me, I was looking for the 4 hour lows before I was wanting to pay myself in this position. So it actually went and hit my second TP area, which was 12,800, which was close to this imbalance here, which it got down to 12,750, I believe, at one point, which I actually was looking to get down to the 4 hour down candle open or this imbalance here at 12,700, basically. So we still may make our way up that way because I think we could basically, find some strength. Maybe we'll even push higher, who knows? But I feel like we'll continue to, as we do stuff like this, we'll find our way down for right now, as long as the dollar continues to find some strength. So let me go back here one more time. So yeah, that was like the 5 minute breakdown of this position, and overall position was a net of a little bit over 4%. So these are the type of positions we're looking for, to happen inside of a day before the market closes. And be able to hold that position and pay yourself throughout that position is really important. So I'll look at the Dow Jones really quick, the 5 and the 1, just so we can kind of see. And you can really start seeing it when you study this price, right? So like matched up together. So you have a fast push. That's your fast push candle right there. So I'm gonna do this because I need it to be this color. So then all it is price action, right? So the 5 minutes started making let's move this out the way. So like essentially to let's see, right here on the 5 minute, all it's done is it's made higher highs, higher lows, higher high, higher low. Right. So until price essentially on a 5 minute breaks this low right here, and then comes back above opening price into the last up candle, that's what I'm looking for is in distribution. Right. So let's say price goes there, boom, huge strike. When you're looking at your line graph, like that's the last low in the five, that's your last high. So like right here, you definitely, they take that liquidity right there, those people. Essentially, if you really go and mark up double bottoms too, those are equal lows inside the last down candle. So they took that liquidity and like I said, it's the same thing right here. Most people at that New York Open position, they probably felt like they missed out. They probably felt like they missed out on this drip right here, right? Especially in the 5 minutes, like, oh, I missed it, I missed it, I missed it, right? Which this was, I mean, it was close to missing. But I will say this is that fear of missing out moment where you got to see um, the people, really, it's these people, the ones that sell under the opening price. Because when you do the fibs and you look at this from a composite way, right? From this low, because it would have only had like this high to this low. And then let's say actually price would have traveled lower, sorry. At this point, people who sold under here, they sold the 61.8. They sold way too low, if that makes sense, from the swing of this move on a 1 minute. So for them to get retraced, right, which is going to happen here on the five now, it makes a lot of sense, right? Because when they push it lower like this, all they're essentially doing is they're filling 5 minute imbalances, right? You can see it right here. This is that price where price really, um, started to accumulate, right? When you look at the actual price right here, right? So price started to accumulate, price pushes out, makes a new high right on the 5 minute. And so that leaves an imbalance. If you can kind of like that that expansion in price like that, that's the ones I'm looking for. So they break that 5 minute structure, they fill that 5 minute imbalance, right? And then what happens? Price starts to run back up, right? And so if you look at from the swing low to the swing high, like as a buyer, this wasn't a bad trade. This is a good 71% imbalance fill, right? So then price continues to run, right? And then this is what I look for. Little subtle things like this is when price closed higher, right? Making that higher high here after rejecting that imbalance. Let's see where that's at on the 1 minute. Right, you can see it kind of like here, you're making higher highs and higher lows, higher highs and higher lows. Well, as you can see, you're always playing to what I call landmarks. And landmarks are the candles that push up, like the fast push up candles, the FU candles, to another, landmark potentially. So essentially, now what you're looking for is the open of this candle, which is if you can see on the 5 minute, it's in alignment with that 5 minute open. And then the 50%, which is going to be this mitigation candle here from 905. So where did price come right into? Oh, excuse me. Drew the 1 minute imbalance. And it's like very small. It's kind of hard to see right here. I know it's like super small. But this one in here, there's definitely a balance in here, like on the smaller time frames, so like the 1 seconds. But this is the one I'm looking for here. So now on a 5 minute, remember the timing is everything. 9:55. So you only have um, about 20 minutes to take a trade here in this point. So I can see how sometimes you can get faked out trying to take a trade right here. But this is where I'd say confluence of waiting for that 5 minute to align with being at a 78.6, 88.6 and timing and playing off that 5 minute opener 50% is going to be as helpful as possible. And see what time this was on the 1 minute. Very interesting. Oh, it's a 5 minute. Okay, cool. So then, bam, you get the rejection on this area. So now, just to really kind of focus, like I said, these people had sold way too late, right? Now you have this swing high and you have this low. So this is the range that you're playing, right? On the 1 minute from this high to this low, right? And so taking a trade up there, this would have been tricky today. I will say, like, this would have been pretty tricky to me. And that's why, like, I personally go with Nas because sometimes you have to really be, like they're manipulating here in a sense, a little bit, right? But, and there was no like area for me where I would have been like, okay, it did this, and then comes back and gives you a chance above like this candle here, and where I could have put my stop here. So that was just a really fast move. You have to really be able to anticipate a move like that. And, you know, like I said, 10-20 also. So the timing really wasn't just there. But as you go forward, let's see. And then price just dies off. So I mean, yeah, I mean if you catch it once it made this low here and price came back up into the 33,840s, I would be targeting those London lows. So yeah, looking at all of them for today. Let's see here one more time. What I could, see happening here in 10 minutes for the open. We'll watch the open really quick. If price continues to here on Nas, it's had this huge bullish push in that power hour of the day. Maybe they found a low and we make, some price action to start attacking yesterday's high in Asian liquidity, the previous day high, right, which is here. And this liquidity that I have marked up, and maybe even these highs, if, you know, for some reason they find some, support, buyers come in, whatever you want to call it, there is some liquidity areas. So I'm not Nostradamus. I don't really like to guess the areas. But those are some of the areas I'm kind of looking at. So we'll watch the open here, see what dollar's doing. And, you know, let's see what the news we have. So tomorrow, 7:30 durable goods. That'll be good. Even though it's not red, like a red folder, this will be good. And then 7:30 Thursday. It looks like 7:30 on Friday, core PCE. And then Thursday we have unemployment claims, GDP. Okay, so cool. Yeah, we have some, good news. Doesn't look like anything for tomorrow, but let's see how NAS opens up. And so, like I said, the price here, when you really look at this, like there's a huge imbalance. I look for explosive moves like this, right, where price explosively pushes, right? If you look at all three, I believe they all had a push right there at the end of the day, right? And I really like Dow's because if you think about if it does find some, buyers in this area down here, where's the liquidity from shorts? Probably break even, probably move to the possibly the order block candle. So this doesn't matter anymore to me, the previous London opens, just the market open. So price can always revisit the market open. So the same thing I was saying with Dow, or excuse me, with Nas, is maybe you have price, it's already made the highs, right? Breaking out of the accumulation. So maybe you have price revisit this area, structural low, right? And then from getting from here to here, you secured at least 1 to 3% of your account, maybe 1.2. And then looking at this first imbalance, uh, right here, going into tomorrow morning, right? Seeing if we get up into that area because, if we do make this higher low and make this higher high, we might start finding our way back up to this liquidity in this previous day high from yesterday, from Monday, right? Because it could be short liquidity. Stop losses just building in that area. So we'll see what they do. Same thing with S&P though, 454. So this one looks really good, right? You guys can kind of see it, right? We have that push higher, like drag people down, right? And then so they leave this imbalance right here, and price likes to find its way. All right. So looking for that step six, that break of structure, right? And then looking for the price to come back into the area, which we've already got step six. So you could basically be planning a move off of that pullback using the structural low. Remember I was saying with this picture that you want your stop loss to be at step four and you want your TP to be right above step six where the break of structure happened. So yeah, that's what I kind of see going into the next day. Let's go back to Nas and see what we get here. Just waiting to see where these opens are going to be really quick. So wow, big explosion up right there from the open, right? So you can already go in here and mark your daily open. For Wednesday. And just what you want to do is you just want to see, when you look at this price at London, is the setup, like I said, um, potentially in an area where prices below the daily open, below London open, and then prices, you know, not going past this candle here, this one here, right? And then price reaccumulates, right? Does that thing, right? Takes out traders after dragging them, comes back to the area. You set your stop over 1 to 3, and then you continue higher into yesterday's liquidity, the Asian liquidity, and the previous daily high liquidity and market open targets. Right? Maybe that happens. Who knows? We'll see when we come back. But let me know, guys, if you have any questions on, how we trade or, any other questions on anything. Just send them to me, and I plan to answer those in these recordings. So I appreciate you guys because this helps me as well as it helps you by me being able to go back and look at these and talk my way through this. So I appreciate you guys, and you guys have a good rest of your night.